Hi traders, welcome to this week's pre-weekly market review by Trade Genius Group. We're looking at the future of the euro and especially versus the dollar. It's getting quite scary now just how low the euro has fallen versus the dollar, and especially after last week's ECB press conference and commitment to adding stimulus into the economy. We're going to be seeing just how that's having an effect on not only the euro but some of the other currencies surrounding this pair. So, quick recap, guys. Last week we had 60 billion euros monthly committed towards bolstering up the European banking system. The ECB has now pledged this, so really adopting a QE type policy to try and combat deflation. This is very interesting indeed, guys, because the effect it's having is actually to weaken the euro, and the euro is already so weak that obviously one might ask, is this pair going to parity? Parity being, $1, so euro dollar at the $1 exchange rate. Well, at the moment the answer is it looks like it, but we have some surprises in store. Very often what comes out as rumors and then gets converted into news sometimes sees a drastic shift in sentiment taking place after it's been priced in and once the market has calmed down following the immediate aftermath. So let's look at some of these pairs and more importantly trades that are connected to this Euro ECB move. So first of all, we have the Euro CHF, that huge crash beyond the ceiling that the Swiss bank had initially confirmed. That 1.2 level was broken, as you can see, and we've noticed a very significant gap just around 1.08, and we like to think that many of the times gaps get filled sooner rather than later. So the price right now sitting on 0.98, you could expect a retracement certainly to 1.08, and then from there obviously it's going to be a continuation or a reversal once again. So that's one thing to look out for regarding the Euro CHF. We don't have too much to say about it other than that gap is about 1,000 pips away, so it's quite a significant retracement that we're expecting, and maybe that could have a knock-on effect on this euro dollar trade, which may also take a reversal. Remember, we are only in the middle of this month, and so the fact that we're in the middle of the month and this monthly last candle, you can see the last candle on your screen, is so significant, we may expect that there is a small chance of seeing some surprising reversals on this euro dollar pair. We've broken the support lines from 123, and now we are in some sort of channel that ranges back all the way to 2006. I've drawn it here with two red lines, an upper and a lower line, and now I'm just drawing you the zigzag that basically the euro dollar has been playing throughout the last sort of 10 years. So if this holds up, then we could expect this price to actually be a final resting zone for the euro dollar before significant pullbacks of a good possible 1,000 plus pips at least. So keep a very close eye on that, and remember we are in the middle of the month, so there is a large chance that the month could change. We've now zoomed in from a monthly to a daily chart, and we want to just keep an eye that this candle here starts to move back into the Bollinger Band range. You see that the spike is firmly outside the band, which gives a very high probability of retracement. We've moved on now to gold, because gold is something that's being increasingly traded and is becoming very attractive during these rather desperate times where the Eurozone looks rather bleak, and also the dollar is so strong, many investors are starting to ask whether or not this needs to have a retracement. And as a result, gold has been strengthening as the safe haven pair, the thing most likely to be associated other than cash, and so people like to hold it during these uncertain times. Gold then knocks onto the Aussie dollar as a currency which is very much linked to commodities, and commodities that Australia trades so frequently with China. And so this Aussie dollar monthly chart also shows you the negative trend that it's been having, mostly because of dollar strength and together with previous bank policy in Australia, which has been interventionist and to weaken this currency by force. So obviously big drops there since 2010, and we see the next line at 0.74 as a very possible touchdown point, if you will, for this Aussie dollar support. Last but not least, guys, we're looking at the pound dollar. Very interesting. Obviously, you see that the pound didn't join the single currency, but it's still been falling nonetheless alongside the euro dollar. And that's also largely to do with dollar strength. So dollar strength really at the forefront of a lot of these pairs, but obviously hit slightly worse on the euro because of the negative deflation in Europe and the effect it's had. So this monthly chart is showing you that we're also at quite a firm support line. And this trending shape can be looked at as some sort of an asymmetric triangle, which usually retraces. So hopefully this will be the final touchdown point for the pound dollar. We want to wait for the monthly candle to close, and hopefully we'll start to see that 1.5 picks up and retraces, certainly at least towards 1.7 levels. Indeed, that's 2,000 pips off from here, so that would be quite a nice trade for you guys to pick up. If we see this pair wavering at this support level and making any attempts to break out, you might want to reconsider things, and in that case it would send this pair all the way down to a possible 1.48, possibly even lower. But our analysts don't believe that that's going to happen just yet, and we think that there is definitely significant room for pullbacks on the dollar, and thus pullbacks on the dollar associated pairs that have been in short mode for the last 6-7 months plus. So certainly next few months we see a possibility of the dollar retracing before interest rates may start to rise later in the year, in which case the dollar will obviously gain exceptional strength. Okay, still to come, guys, this week. Don't forget we have the Greek elections happening today. People very skeptical right now in the Eurozone. Denmark, Sweden, currencies are really suffering, and people are starting to ask, what they're still doing in this ECB-associated single currency. On top of that, guys, we have German IFO business climate sentiment coming out on Monday, and then GDP figures this week coming out Tuesday in the UK, Friday in Canada and the US, and of course the major news this week will be Tuesday's consumer confidence in the US as a consumer-orientated economy by and large, and last but not least, the dollar Fed funds rate on Wednesday, followed by that crucial FOMC statement that could really turn around some of these major pairs. Have a great week, guys, and trade safe.